This is the show where I analyze stocks that are interesting. So, if you find that interesting, then please consider liking the video and subscribing to the channel. Very busy day in markets today. In my portfolio here, we had 6 companies that released earnings today, one of which is the Golden Goose here, Philip Morris International, ticker PM, company that I've made a couple of videos about, and the largest position in the portfolio. Very quick video today. I simply want to take a look at the earnings report and give my thoughts. Philip Morris outpacing the market with more room to run, reiterated the call of a strong buy. We see that it has notably outperformed the market by almost 14 points in that time frame. As usual, my viewers can get a discount on a subscription to Seeking Alpha through my affiliate link, which will be in the description. So just be sure to take a look at that if you're interested in accessing all of the premium features of Seeking Alpha, and so you can take a look at my analysis that I write. So let's get into it. Philip Morris has been a top pick for my portfolio personally. Have had significant overweight position in the stock due to strong held conviction in the shares. We see over the last year, it's really ran up quite a bit, up 72%, up 40% year to date. There's reasons for that. There's reasons that it continues to outperform. And at one point in time, the stock was up over 170. It hit a new all-time high today on the earnings report. Why was the earnings report so good? I'm just going to pull up some of the information here. I'm not really going to run in depth with the background of the company and what they do. There is going to be a assumption that viewers understand what the company is and what they do. The main thing is, of course, Philip Morris International is a tobacco stock. It's one of the big 3 tobacco stocks, being Philip Morris International, Altria, and British American Tobacco, of which Philip Morris International spun out of Altria in 2008 or 2007. So, what I think is relevant here is the thesis. The thesis here behind Philip Morris International is very straightforward. They are the market leader in reduced risk products or smoke free products, meaning heated tobacco units, HTUs, and oral pouches. Of course, they are the owner of the Zyn tobacco pouch brand. Zyn here, the market leader in the US market. I've seen a lot of chatter on the web the last few weeks about how the Velo pouch, I've got those around here somewhere, how the Velo Plus pouches from British American Tobacco are going to steal market share. That remains to be seen. I think we need to pay close attention to what the numbers tell us. But anyways, let's take a look at the earnings report and weigh in on what it looks like. Okay, so they say excellent Q1 marks, underlined, excellent. Rapid and increasingly profitable volume growth. Continued dynamic progress of smoke-free products. You have the IQOS, which is the HTU, Zyn, our oral tobacco, and Vive, that is, I believe, a vape. Resilient combustible volumes or cigarette volumes with robust pricing. I think a very underrated component of the appeal of Philip Morris International is the combustible portfolio. The combustible portfolio is the top brand is Marlboro. They are the owner of the Marlboro brand outside of the United States. The cigarette market outside of the United States is arguably much more robust than inside the United States. And not only is there more growth potential because some countries are actually not experiencing contracting volumes in cigarettes like the United States is. But we also have the number one brand globally, Marlboro. So that's an underrated aspect of the thesis. So just to bring it back, double-digit organic top and bottom line growth. That's pretty meaningful in the shaky macroeconomic environment we have now. We have significant adjusted operating income margin expansion to greater than 40% and plus 13% earnings per share growth, double digit per share earnings per share growth. Now forecast double digit adjusted earnings per share growth for the year. So yes, they have increased guidance for the year. I talked about how that might be the case in the last video that I made. The driver of that is the dollar has depreciated meaningfully in the last few weeks off the heels of tariff threats from our administration here in the United States. That's sent the dollar weakening by roughly 10%. Of course, with this company having the majority of their sales internationally, that is a tailwind. So we see here in the first quarter versus the prior year, 4% volume growth, 10% revenue growth. And then this is including currency adjustments. Adjusted operating income up 16% and adjusted earnings per share up 17% or 12%. So we did see in the first quarter ending the end of March, that was before the move in the dollar that we saw, we did still see a strong dollar and translate into roughly 4.5% currency headwind there. But those are exceptional numbers. Increasingly profitable smoke-free transformation. We see here organic growth in the first quarter versus the prior year. The smoke-free portfolio, 20% revenue growth, 33% gross profit growth, and 670 basis points of smoke-free gross margin expansion. Those are just exceptional numbers. And then here we see combustibles net revenues growing almost 4% and gross profits growing greater. So we see combustible gross margin expansion there too, translating to a 16% increase in gross margin and 340 basis points of margin expansion, 10% revenue growth versus the prior year quarter. I mean, these are not numbers that we expect out of tobacco stocks. So we're kind of seeing what I would classify as a trifecta of catalysts that are driving the stock price further right now. I'm not talking my own book here. I have nothing to sell you when it comes to evaluating this company. The fact is that tobacco stocks, if it was just cigarettes, tobacco stocks would be appealing in the environment we have now, where you have worsening macroeconomic conditions, higher than average interest rates, the threat of a global slowdown, trade war issues, a weakening dollar, all of those things. If there wasn't the smoke-free story, that would make this a interesting investment prospect, albeit it might be trading at a 5 to 6% dividend yield. Whereas we see now that the dividend yield has decreased meaningfully. But we see here continuous volume growth, 14.4% volume growth, and these are in units, in billion units, 14.4% growth in volumes versus the prior year. And oral smoke-free products are 27% of that, but 107% e-vapor, or the Vive brand. And we even see here increase in cigarette volumes. So pretty strong. Here is kind of their product mix right here. There's still a lot of market penetration to go judging by this slide, we have 49 markets with only one smoke-free product category existing and 16 with all three: IQOS, VEEV, and ZYN. So top line growth powered by increasing volumes, increasing pricing, and category mix. And we see here 4.4% currency and acquisition slash divestments. Again, the weakening of the dollar is not even pronounced or not coming through in these results. So that is very interesting. We have a chart here that kind of explains the gross margin expansion. Here we have IQOS. Here's a couple of the unit packagings here. They're expecting for the fiscal year ahead for IQOS to grow further, to penetrate further into the market. European numbers here for the HTUs continuing upward trajectory. And this is across all smoke-free products, but you do see here that IQOS HTUs leading the charge in Europe. Again, as we've looked at in the prior earnings report, every single market that was shown here, I don't know if they're cherry picking, something to, I guess, take with a grain of salt, but we see that of all the markets shown here, only Prague and Bratislava, hopefully I'm saying that right, showed a flat or negative share change, whereas the rest of the cities very, very strong. Similar numbers related to IQOS in Japan exclusively. And then taking it out even further into more geographically diversified markets, we see here, again, only Cairo had a contracting offtake share in HTUs. This is very, very interesting. This is the US shipment volumes of ZYN. One thing that I do want to highlight here is that in the last earnings report, they actually showed a graph of the market share that they had and how it had dipped a little bit. If I could remember off the top of my head, I believe that these are three different measures of market share, but I think this middle number and this right-hand number are lower than the number that they showed last quarter. So I think what we're seeing is that we are seeing some share decrease here in the oral pouch category. However, we see here, look at this growth in million cans, almost 40 million, 37 million more cans shipped quarter over quarter. So I'm not going to verify because I'm trying to get through as many of these videos as I can today. I'm not going to verify if share decreased, but assuming that it did decrease, what we are seeing is a product category that is rapidly growing. In fact, it's growing even faster than I had initially projected in my first analysis that I did publicly of this company in November of last year. I think I pulled a graph that said that the category would grow at a 32% CAGR over through 2030 or 2032. What we're seeing here is that actually might be conservative. So while, and you know what, maybe I will verify. Why don't we verify what the prior quarter said right here? Okay, so this is February 6th. Let's go to the slide about ZYN here, right here. So see how this is different? There's telling you something. So even though we do continue to have the dominant market share in the United States, we see here ZYN retail value share of 72.4%. We see here that is higher than all three of these numbers. So just like I surmised or estimated, we actually are seeing presumably the Velo Plus brand from British American Tobacco taking market share in this expanding category, something to watch. Okay. But I do believe that there is a lot of room in this category for winners. And right now, what we're seeing is that the Zyn and the Velo brand are the main players in this new hot growth story in consumer staples. So just something to keep an eye on, though, if you're paying attention, is market share. But I think as long as we see these amazing growth numbers, I mean, we see it's practically tripled over the course of 2 years from Q1 2023 to Q1 2025. Okay, so that's insane, right? And here we see international Zyn expansion with very strong growth. Now, one thing that was brought to my attention, speaking of the Velo Plus, a couple of weeks ago, one of my followers on Twitter, they mentioned that the Velo brand is the dominant brand in Europe. So while they are penetrating the market in the United States with much success, there is plenty of market share to go around globally. We see here international nicotine pouch shipment volumes. Here they reported a 75% increase in the fiscal year. Here they're saying 53% versus the prior year quarter. Okay, so something to monitor. 182% excluding Nordics. Now, what's notable about that is the Nordics are the birthplace of the Zyn brand and of the nicotine pouch. So that's more of a mature market, although still growing quickly. So again, something to watch. The oral pouch numbers are a big contributor to the performance of the stock as of late. However, what I'm seeing is a story, and I'm not going to take a look at the British American Tobacco until at least their earnings. I'm not going to take a look at that on camera. But what we're seeing is that there is very, very strong secular growth, and we have a leading brand here. So, and then we're talking about Vive, greater than 2x volume growth year over year. That looks incredibly strong. Combustibles, we see this is the pricing percentage growth versus the prior year, high single digit pricing increases, and mid single digit gross profit increases. So that looks good. Now, this is kind of the crux of our video today. So they expect to do better than they projected in the prior quarter in 2025, despite the outlook that we're seeing. They're expecting smoke-free product shipments to increase 12 to 14%. And they're expecting the Zyn shipments. Before they got into 780 to 820 million. Now they're going 800 to 820 million. 6 to 8% revenue growth and 10 to 12.5% earnings per share. But we see here that what they're now saying, and this is the thesis of currency tailwinds playing out that I've been discussing in my last few videos. What we're seeing is that indeed management does expect the weakness of the dollar to persist throughout the year, and that results in a 150 basis point tailwind to earnings per share. What a report. Let's briefly take a look at the transcript here. Our smoke-free business performed exceptionally well across all areas, with shipment volumes up 14.4% year over year, organic net revenue growth of plus 20%, and outstanding organic gross profit plus 33%. The thesis is intact, and the market is coming on to the true potential of the company. Now, notably, our Seeking Alpha Quant has been grading the stock since November. It's been grading the stock as a strong buy. It dipped into buy territory, and it's been grading it as either a buy or a strong buy since November. So over the last 2 quarters, today it dipped down to a hold. We're far from over with the growth story here. when the stock price was $100 a share, it was a pretty good deal. But what we're seeing is that the thesis of smoke free products is really starting to take off, and it's really starting to augment shareholder returns here. Um, but now we have a price earnings ratio hovering up to 23 times on a forward looking basis, and our yield is edging down to 3%. So, my approach here is I don't feel the need to chase the shares here. I already have a significant overweight position, 13% of the portfolio. Very, very happy with the results so far. And I'm planning to continue to hold and see what happens. But as long as management and the company continue to deliver such exceptional results, I see no need to trim. I don't see the price earnings ratio to be egregious when we look at it compared to the other tobacco stocks. I'll just compare it to this one. Just as an example, we see here Seeking Alpha is still saying British American Tobacco with a strong buy on a forward basis, less than 10 and a 7% dividend yield. So, again, I'm not necessarily saying that it's a better deal, but while I think one thing to monitor is those market share numbers that management is saying here about the Zyn pouches, something to pay attention to in the British American Tobacco results. So, very pleased with the results. A very strong performer so far. I do expect the company, given how strongly it's performing, given how strongly I expect it to, the underlying business to continue to perform through the end of the year, given the fact that I do expect the dollar to stay kind of at the level that it's at now, and some of the more high flying areas of the market of 2024 AI stocks, the Nvidias of the world. I expect those to have a tumultuous year this year. I still believe that this company will outperform on a relative basis. But I do tend to agree here with the quant rating that now we've really seen it run and run and run, and there's I don't see much downside risk. Although many might disagree with me, I don't see much downside risk to the shares here with such strong growth prospects. However, I think it's fair to say that that's largely priced in at this point. However, I do expect if the broader market, the S&P, the NASDAQ, I do expect this stock to outperform with lower volatility versus the indices, just because it's a bright spot. There's multiple things benefiting it here. So, anyways, that's really going to be our video today. Again, if we take a look at the technical side of things, again, obviously, we continue to persist in this very, very bullish uptrend here. Here, we are at all-time highs. We are in uncharted territory here. We do see here that there is kind of a bit of support that's formed around this $150 range. Given such a strong report, I see. I don't believe that the stock will return another 70% over the next year. However, I do expect it to be less volatile than the indices and to have less downside risk, given the advantages the underlying business has over some of the more challenged areas of the market, particularly technology. So, while I can't in good conscience say that the stock continues to be a strong buy, I do think that if I did not have a position in the stock currently, that I would consider still purchasing shares here. However, for me personally, it's a hold. However, I think the stock does maintain that rating of, being a strong buy, a strong performer in the upcoming months, quarters, and years ahead. So, the thesis is intact, and if anything, it's surpassing my expectations. I did expect the stock to perform well once it broke out here, but admittedly not to the degree it has. So I'm very pleasantly surprised with the performance. So hopefully that all makes sense what I'm saying, and hopefully you found this entertaining and useful. There wasn't a whole lot of depth to this video, but just wanted to do a quick run through of the numbers. As a shareholder here, very pleased, very satisfied with the results, and expect further strong performance. So anyways, if you found this interesting, then consider liking the video, subscribing to the channel, consider reading my analysis on Seeking Alpha, so you get the in-depth thesis explanation and stuff that I write about, because frankly, when I write, it's a little bit more well articulated than when I sit up here rambling on camera. So anyways, that will conclude our video today, but hopefully you found this interesting, and I'm going to move on to the next company that reported earnings today, which would be Carlisle, CSL. So yeah, I'm going to get to it once I upload this. All right. Thank you for watching. I appreciate all my viewers out there. I'm almost at 300 subscribers, almost there. So it's a pleasure to, do this for you and serve you in this way with analysis. And hopefully you found it helpful. All right. Until next time, thank you and goodbye.